Welcome back to my channel. I hope you are gaining value. And if you are new here, I'd like to say hi to you and welcome back. And for those that are here, I hope you are also gaining value for your time on this channel. Now, today's topic is inducement and liquidity in training. The definition: inducement is an area of deception where most traders believe is the right place to enter a trade, but we most of the time are induced into the market as a form of liquidity. Now, where can this inducement be found? It can be found in our order block, support and resistance, swing highs and swing lows, and trend line. Well, these points are what my coach actually taught me, which I'm actually giving out. But inducement, a lot of the time, is more on, I always speak it as equal lows and equal highs. It's very easy for me that way to know where the inducement is going to happen, or but just making an assumption of where it's going to happen. Now, I gave an example here, but I'm going to draw you a sketch, a normal sketch on how it can be created sometimes. Sometimes market does higher high, higher low, higher high. Then you see this, right? Sometimes tap the other block and comes out. Am I wrong? This is an inducement that's taking place around here. Or let me not use that as an example. Let me give you a very nice one, which many of us see on the chart, that happens a lot on the chart. Higher high, higher low, higher high, then this happens. This is the first one, which signals what? An equal low. Many of us usually encounter this a lot. Can you see that? Many of us encounter this a lot. We will tap this and as inducement that took in towards move in the current direction. It's always very, very nice trade. Or we'll see something like this. Trying to give you a good example. Lower low, lower high, lower low. Then this will happen. Have you seen this happen on your chart sometimes? And you'll be wondering, "Ah, why the market not react here? Why the market not react here?" These are scenarios or examples that can happen on your chart. Equal lows, trend line, but it's actually a form of inducement in the market. Example, you can see what happened here. Market did what? Market did a break of structure around here. Bear with me, I'm using a 15-minute time frame, so I'm going to use 15 minutes here, BOS. And what happened? There was a change of character here. Can you see that? There was a change of character here. We signal a change of character. Now, would have assumed that, oh, because of we saw what? We saw a break of a other block here, another block here, and we have a fair value gap. Majority of the time, we'll assume that this is our zone, because why? We draw our Fibonacci from the high to the low. Okay, bear with me, 50%. From the high to the low, from the high to the low, and this signal to us that this other block is in 50%. But actually what happened, there was a deception here, because it was a form of inducement. And market did what? Market played our psychology around here, came in and induced what? Induced this, tapped on the fair value gap with all the other block. It depends on how you want to do your entry and move down in the direction. Now, going around the chart, I'm going to show you some amazing examples of how an inducement can take place in the market. Now, what do you see here? You see here there was a change of character, right? There was a change of character, which we're expecting market to either come to this fair value gap or react in this other block. But market needed what? Market needed liquidity to push it, because liquidity is the driver in the market. Liquidity is what the driving force in the market. What happened? It did this, it went up higher, but if you look at it very, very well, it came down here, created a form of body, came up again, and what induced that location, it induced this swing point here and continued this direction. It kept going up and up and up. Do you see that? Let me draw this higher for you. Do you see that? This is what we call an inducement. Whenever you see an inducement in a chart, or whenever you're about to enter a trade, following directional bias of the market is usually very, very sweet trades to go with. Now, what do we see here? We see what? There was a break of structure here. Can you see that? There was a break of structure here. And what happened? Market shifted structure here. Can you see that, right? Market shifted structure here. What do you see here? You see a trend line. It's not even a must you do it as a form of a trend line. It's not also a must, but you can do this what? As a form of inducement. These are inducements, a swing low. Also, it created what? A swing point here also to generate what? Liquidity inducement. Can you see it? Now, if you go around your chart again, just going around trying to find points of inducement, you can see one beautifully created here. What happened here? Higher low, there was a break of structure, not a break of structure, but a form of liquidity though. But what happened? Market shifted structure here because market broke out with a what? With a wick. So I won't categorize this as a form of a break of structure, but it's a shift in market structure. Why? Because a swing point was being violated. Can you see that here, right? And what happened? Markets what created what? A trend line liquidity here, a form of inducement that was being created before what? Markets came back to react where? React at the other block here, and it went down. Now, if you go around your charts, you can see a lot of in form of inducements, beautiful inducements that have been created on your charts. You will see a lot, mostly here. Can you see this? What happened here? A swing high was being violated. Can you see it? Can you see it? A swing high was being violated before market pulled down. Let me keep looking around for an inducement. If you go around your chart, I always call it a form of a fake break of structure. I always call it a fake break of structure. Sometimes you can see this happen here: higher high, higher low, then a higher high and higher low will happen inside, then break out, right? This is the general what? This is the break of structure, the main zone for a break of structure. But what a structural build was done inside, that form is what? An inducement. Do you see it? Before the main break of structure, a fake break of structure was created inside. This is what we call an inducement. Example here, we can see that there was a break of structure here, and there was also a break of structure here. Can you see that? Can you see that market retraced back inside and what? It took this low. Can you see it as a form of what? Liquidity inducement. You can see that, right? So if you go around your chart and play with it a lot, you will see a lot of inducements. Even with here also being induced, it came for this what? This what? It came for the main order block, break of structure, the swing point, because you have marked the other block looking to the swing point, and market reacted here, created a lot of liquidity, pulled up, but liquidity was being created yet for market to come and take it out. Let me go around. It's just something that you just have to have at the back of your mind, how liquidity and inducements are being created. They are a form of deception. You can see what happened here. What do you see here? An inducement has taken place. Can you see? And what happened? Markets pulled up. Okay, let me keep on looking for examples for you. Happened here also. What do you see? You see a break of structure here, right? A break of structure, which is higher high, higher high, higher low, higher high, right? Marking your seasonal reference point, all I can see here is the other block. But what happened? Market created what? Market created what? An inducement around here. Market under an inducement around here. Can you see it? You can tap this what as a trend line. Can you see? There was liquidity here, form of inducements. Also here to that created inducement around here. Market pulled down, grabbed all these liquidities down here before it pushed up. So I hope this video is very beneficial to you. It's a form of fake breakout. I use that word fake breakout, or a form of fake break of structure created inside sometimes a structure before market comes back and take out that form of liquidity. I hope this video was very impactful to you. You can practice it with the sketches I gave here. I gave a drawing here. You can use it as an example. And the last one is this one that goes like this. It's very common. It happens a lot, majority of the time on the charts. This is also what? A form of what? Inducement. Don't forget to subscribe to my channel and ask your questions, and I'll be here to answer you. Whatever thing you do not understand, just message me in the comment section and I'll reply. Thank you very much.